You are living through the opening act of what historians will later call the greatest precious metals bull market of the modern era. As of today, gold closed 2025 above $4,200. Silver just crossed $56. Most people still think this is just another inflation hedge rally. It is not. This is the start of a secular, decade-long advance driven by forces that almost no one is pricing in fully. Here are the 7 reasons that will push gold toward $5,000, $8,000, and silver toward $100, $250 by the early 2030 seconds. Debt debasement, the only way out. Global debt is now $350 trillion. Interest on that debt already eats 20–40% of government revenue in the US, Japan, and most of Europe. The only politically acceptable escape is financial repression. Keep rates below inflation and slowly inflate the debt away. Every percentage point of real negative yields is rocket fuel for non-yielding gold. We are entering a 15–20-year period of deliberate currency destruction. The end of the 40-year disinflation regime. The bond bull market that began in 1981 died in 2020. Central banks have lost control of the inflation genie. Even if CPI falls back to 2–3%, the era of structurally falling interest rates is over forever. Gold and silver are the only assets that have risen in every major inflationary decade of the last 100 years. Central bank buying on steroids. From 1971 to 2008, central banks were net sellers of gold. Since 2009, they have been net buyers, and the pace is accelerating. 2022, 2025 saw record purchases from China, India, Turkey, Poland, and others. They bought more gold in the last 3 years than in any 3-year period since the collapse of Bretton Woods. They are preparing for a world where the dollar's exorbitant privilege shrinks. The coming dollar reserve share collapse. The US dollar still makes up 58% of global reserves, but that share has fallen 13 percentage points in just 25 years. Sanctions weaponization has given every non-aligned country a permanent incentive to diversify into gold. A move from 58% to 40% dollar share over the next decade releases roughly $6, $8 trillion of dollar selling pressure. Much of that money will flow into the only politically neutral, liquid, millennia-old money, gold. Silver's double supply shock. While gold supply grows 1–2% per year, silver mine production has been flat or falling since 2016. 50–60% of silver demand now comes from irreversible industrial uses: solar panels, EVs, 5G, AI data centers, military applications. By 2030, the world will need 300–400 million more ounces of silver per year than it produces. That deficit can only be filled by price rationing, meaning dramatically higher prices. The return of the 1,970 seconds playbook, only bigger. In the 1,970 seconds, gold rose 24 times and silver rose 36 times in less than 10 years. Real yields were negative. Debt to GDP was 35%. Central banks owned almost no gold, and industrial silver demand was tiny compared with today. Every single one of those variables is far more extreme in 2025. This decade starts from a much more explosive launch pad. Generational wealth transfer and safe haven rotation. The largest wealth transfer in history, $80 trillion from boomers to millennials and Gen Z, is happening right now. Younger investors have zero emotional attachment to 60/40 stock bond portfolios that are getting destroyed. They are rotating into Bitcoin and precious metals at a scale that dwarfs anything the 1,970 seconds ever saw. Bottom line: we are not looking at a normal 2–3 year bull market. We are looking at a 10-15 year secular super cycle that will take gold from under $3,000 to the $7,000, $10,000 range, and silver from $35 to triple digits conservatively. The last people who ignored this setup in the 1970 seconds spent the next 40 years wishing they had listened. Gold and silver are not speculations. In the decade ahead, they will be the only true preservatives of purchasing power, while everything else is quietly confiscated by inflation, devaluation, and default.